Hello viewers, I highly welcome all of you to AE Accounting Tutorials. But then before we start, don't forget to subscribe to my channel so that anytime I drop a new video, you get a notification right there on your devices. And also like, comment and share my videos for the benefit of others. Today we are going to look at final accounts of a sole trader. When we talk of final accounts, we are actually talking about the trading profit or loss account and the balance sheet. Is that okay? So we are going to look at how sole traders prepare these two accounts. Okay, so we'll be looking at the trading account, and then the profit and loss account, and then the balance sheet. Okay, but the combination of the trading account and that of the profits and loss account gives us an income statement. Is that okay? Income statement, sorry, an income statement. And then the balance sheet, now we also call it a statement of financial position. Statement of financial position. But the trading account, we actually prepare it in order to ascertain the gross profit or loss of a business. Is that okay? And then we also prepare the profit or loss account in order to ascertain a net profit or loss. So the combination of these two accounts will give us the income statement. Is that okay? So the income statement, generally we prepare it to ascertain a net profit or loss. And we call the balance sheet statement of financial position just because we prepare the balance sheet in order to ascertain or in order to assess the financial position of a business. Is that okay? Our focus on this video will be looking at how the income statement is prepared, the format of the income statement. That is the combination of the trading account and that of the profits or loss account. So income statement for the year ended. Okay, so that is the year, at the end of the year, in which the sole trader is preparing his or her final account. Is that okay? So in this account, we will be looking at the trading aspect and that of the profit or loss aspect. So we will begin with the trading aspect. Okay, but then it is a combined account. But before that, let's quickly look at how we determine profits in our business, where we talk of a selling price and a cost price give us profit. Okay, the reason why I wanted to do this analysis is that we prepare this income statement to ascertain profit or a net profit or loss. So in our business school, we've learned about how to calculate for a general profit. Okay, so let's use this practical formula to just show the meaning of the income statement. It is the true reflection of the income statement. But then the selling price here is the price per unit, and the cost price the cost price per unit. So we wanted to know the total sales. In order to know the total sales, the selling price per unit times the quantity will give us the sales. Okay, so we can quickly say that the selling price per unit will become sales, and the cost price per unit will become the purchased figure or the purchased amount. Is that okay? So we can also conclude that we'll be having our minus the purchase or the purchase amount will still give us profit. But then mind you that sales will be subject to adjustment, and this adjustment is where you make sales to your customers, and sometimes they may return part of the goods to you, maybe because the product is not good for their use. Is that okay? So when that happens, and the customers return part of the goods to you, we call it a return invoice or a sales return. You need to less it from the sales figure in order to ascertain the actual sales or the net sales. Okay, when we have our sales and we less our sales return, it will give us a net sales. Okay, it will give us our net sales. So this sales figure can be adjusted to arrive at a net sales. So with this, we'll be representing the sales by net sales. So you can have this as net sales. Okay, then the purchases. But then mind you that we are matching the cost we've incurred on the product we sold. Okay, so we are taking the cost incurred on the sales in order to get the actual profit. So the purchases is not enough to arrive at the cost of sales. So there are some minor adjustments that will be made to the purchases amount in order to get the actual cost of sales of the product. Okay, so but there are adjustments that will be made to the purchase to arrive at the cost of sales will be done in the statement of financial position. So let's quickly represent this by the cost of it, or it will not meet the demand of our customers. Because of this, we need to actually we need to buy products in order to, or we need to purchase in order to meet our customers' demand. So we will surely purchase a product. So we add our purchases. Is that okay? But then let me do it this way to make the analysis very simple, because there are some adjustments that will be made to purchases. So let me bring it here. Is that okay? Because we will make an adjustment to the purchases. And with this purchase amount, sometimes it won't be enough to get the actual cost of sales. Sometimes when you purchase a product from your suppliers, you take a vehicle to carry the product to your premises. That cost you've incurred on carrying the product to your business center is what we call the carriage invoice. So we need to add it. So we still add our carriage invoice. Or carried on purchase. So we add it. Okay, and we definitely get an amount. After adding the carriage invoice, what happens is that sometimes we also buy product from our suppliers, and when we find out that part of the product is not good or is faulty, what happens is that we return it to them. Okay, so when we return it to them, we need to less it from our purchases figure in order to ascertain our net purchases. Is that okay? So we'll be lessing our returns on purchases, okay, or return outwards. So let me say return outwards or return outwards. So we less it. When we less our return outwards, we'll be arriving at our net purchases. Our net purchases. Our net purchases. Okay. So when we add our net purchases to the opening stock, we will be arriving at a cost of goods available for sale. So the net purchases plus the opening stock will be the stock or the products which is at our disposal. Okay, so that will give us the cost of goods available for sale. So cost of goods available for sale. So I will say COGAVs. Is that okay? So this cost of goods available for sale, it comprises of the opening stock and that of net purchases. Okay, but we want to ascertain the cost of sales and match it against the net sales. Okay, so sometimes you may be in the business at the end of the financial year, some of the products will be left. Okay, that leftover product, we call it the closing stock or the closing inventory. So we need to take the closing stock from the cost of goods available for sale in order to ascertain our cost of sales. But mind you, this adjustment we are making in the trading aspect of the income statement comprises of the direct component to sales. Okay, so all direct components that relate to the sales or the purchases, we match it in the trading account, and the other indirect aspect will be matched in the profit or loss account. Is that okay? So when we less our closing stock or our closing inventory, we need to get our cost of sales. But mind you, sometimes there may be only wages in the question. When there is only wages, it means that it is a direct, okay? But when you see wages and salary, it's an indirect, because salary is an indirect expenses, and that needs to be treated in a profit or loss account. The only wages is a direct expense to the business as a whole, so we will treat it in the trading account. So when we less our closing stock, the amount we get here is supposed to be the cost of sales, so that we less it from the net sales. But if there is wages, we need to add that direct wages to the cost of goods sold. Okay, so we name this cost of goods sold. Okay, but if there is no wages, this particular figure becomes the cost of sales. Is that okay? So you add direct wages. If there is any direct wages, then we add. After adding, the amount we now get to become the actual cost of sales. The cost of sales that we are looking for. Is that okay? Then we match the cost of sales against the net sales revenue. Is that okay? So what you get here may either be a gross profit or loss. We only arrive at a gross profit when the sales revenue or the net sales is bigger than the cost of sales. But in a scenario or in a situation or in examination purpose where you get your cost of sales being greater than that of the net sales, we arrive at our gross loss. Is that okay? So this is actually the end of the trading aspect. So we are going to continue with the profit or loss aspect. Is that okay? So the profit or loss aspect begins with other incomes. If there is any other income, you add it to your gross profit before you less all indirect expenses. Is that okay? So let's continue from here. We are continuing from here, okay? So let me quickly bring my CD sign. But mind you, let me explain myself here, okay? Maybe you might meet it in the question and you may be a little bit confused, okay? Mind you, there are a situation where the sole proprietor may decide to make drawings of the stock or may withdraw part of his goods for personal use. When the customer or when the proprietor decided to make drawings of goods, what happened is that the double entry is that we debit the drawings account and credit stock account or credit purchases. Is that okay? So with this analysis, we can say that anytime the sole trader make drawings of stock for personal use, we need to less that drawings, the stock drawings from the purchases figure. Okay, we need to less it. So this is the format, all right. But sometimes we may see a situation where the sole trader will make drawings for the stock. So in that situation, we will less the stock drawings from the purchases amount. Is that okay? Fine. So we are continuing from here where you have a gross profit, or loss. I'm referring to this amount this here. After that, we add other incomes. Okay. Any other incomes that comes to the business, we add it. Is that okay? So other income like investment income. Let's say investment income. We come here. If there is maybe discount receipt, we add it. Probably if there is any commission receipt, we add it. Is that okay? And sometimes if there is a decrease in provision, is that okay? So decrease in provision for doubtful debt, or decrease in provision. That's decrease in provision for doubtful debts. We add it. There may be more, how do you call it? There may be other income that you need to add. Sometimes there may be a revenue owings. Is that okay? Or income accrued. All this must be added. Income accrued. You add it to other income. Then you bring the total. Then the answer you get to give you the total income. Is that okay? So you get your total income. After that, you less all the indirect expenses. Is that okay? So the indirect expenses, so under our operating expenses, in our operating expenses, that is the indirect aspect. You match it against the revenue. You may have maybe wages and salaries. Wages and salaries, you bring it here. Maybe you may have insurance. You bring it. Is that okay? But anytime there is an expenses prepaid, okay, we less it from the expenses. Is that okay? So let me just give a scenario. Sometimes there will be expenses prepaid. So let's say insurance prepaid. Maybe insurance prepaid. The insurance prepaid, then we bring about insurance here. Then we less the insurance prepaid from it to get the actual insurance expense. Is that okay? Maybe you may be having rent. Is that okay? But sometimes there may be an expenses owing. Is that okay? But all these adjustments are done in my other previous videos where we look at adjustment for final account. So you can go and watch that video to really understand this basic adjustment. Okay. So maybe rent is an expense. We have our rent here. So anytime there is an expenses owing or expenses accrued or expenses due, maybe rent due, that is expenses owing. So what happens is that you add it to get the actual expenses for the year. Is that okay? And anytime maybe there is an increase in provision, so let's bring increase in provision. The provision may be a provision for bad debts or a provision for doubtful debts. It is an expense, okay? All these adjustments has been done in my previous video. You can quickly go and watch to understand why all these amounts are here. Is that okay? And if there is maybe a general expenses, general expenses will come. If there is any bad debt, that is an expense to come. Is that okay? If there is any depreciation, that is depreciation. It's also an expense to come. But mind you, the depreciation, when this type of question is being given, an income statement question is being given, when the depreciation is being given, the question will be given in the form of trial balance and that of additional information. So the depreciation I'm talking about here is the current depreciation that is being found in the additional information will be treated as an expense. But the accumulated depreciation or the provision for depreciation in the trial balance won't be treated as an expense, okay? It will only be treated as an accumulated depreciation and take it from the cost of the asset in the statement of financial position to get your carrying amount or the net book value. Is that okay? So the depreciation I'm talking about is the depreciation for the year, the current depreciation that is being found in the additional information. And you may also meet other expenses that you may add here. Is that okay? And if there is a revenue prepaid or income prepaid, it will also be treated as an expense. Is that okay? But let's consider this amount and the total expenses will be written here. So after we take our total expenses, let me even do it this way for better understanding. Is that okay? So after we underline this, the amount we will get here will be our total expenses. So we less our total expenses from the total income, then we get our net profit or loss. Is that okay? And this net profit or loss too, it happens when we get a net profit when the total income is greater than the total expenses. But in a scenario where the total expenses is greater than the total income, we arrive at a net loss. Is that okay? So basically, this is how the format of the income statement actually look like. Is that okay? But then there are other items that may be found here. But with the application of this, you should be able to prepare a full income statement for a sole trader. In our next video, we'll be looking at the format of the statement of financial position for a sole trader. Is that okay? So with this, we'll end our lesson here. But don't forget to subscribe to my channel. Is that okay? Click on the subscribe button, okay, to keep our business moving. Is that okay? And also comment, like, and share the video for the benefit of others. Until we meet again, bye for now.